Okay, let's try this again. I recorded a whole video and didn't even realize the audio wasn't working. So, take two. Hopefully this one's better. Anyways, so welcome back to another episode of MotherFunded Bootcamp, as previously discussed on the video on what were we discussing? Volume imbalances. Geez, I can't even remember. So on the last episode in volume imbalances, we were talking a little bit about at the end what we were discussing this time, which would be order blocks. And so that's what we're going to get into. So order blocks is basically one of another confluence that we can use in our tool belt as smart money concept traders. All of these confluences and all of these kind of topics that I'm going to be discussing really revolve around smart money concepts, which is how I trade, how I learned how to trade, and what a lot of people use within their own strategies to trade. So basically, simple definition of an order block is the change in the state of delivery. Now, what does that mean? It can mean a lot of things. But basically, all that a change in a state of delivery is when the current trend is kind of shifted for a little bit, and like I said, if we have an uptrend, we see a couple down candles, and then we see some more up candles, and we can clearly see that it's still an uptrend, but there are a few breaks in that structure. That is when we have a change in the state of delivery. So just to break it down a little bit further into written format, and I know it's going to be kind of confusing until we show pictures, but like I said, I'll illustrate it. So a bullish order block. It's going to be a down candle within an uptrend or bullish trend that has a bullish candle close above the previous bearish or down candles opening. Okay? No, it's kind of confusing, even though it's a short definition, but I'll draw it out so it makes sense. So, bullish order block, a down candle within an uptrend or bullish trend that has that's candle. It's a two I should say it's a two. So, it actually can be more than two candlestick pattern, but for the purposes of just keeping generic, and we'll build off of this just so we can understand it. Two candlestick pattern right now. So, first candle is a down candle for a bullish order block. Second candle is a bullish candle that closes above the previous bearish candle's opening. So, kind of to show it, let's say we have an uptrend. So we got candle 1, I'm not going to do wicks. And then we have a down candle like that. And then we have an up candle that closes above this candle's opening. So I'm going to change this to black. So let's actually do it like that. So this candle kind of just depicting what the current trend is. Think of more bullish candles leading up to this one, and then we have a bearish candle, and then we have the next candle open, trade up, and close above this candle's opening, because like I said, candlestick structure is for bullish candles. Come on, why is my thing frozen? Here we go. For bullish candles, we have the open, the low if there was a wick down here, the high if there was a wick up here, and the close. Same thing with bearish candles. We have the open on the opposite side, trade down, create the low if there was a wick, close right here. So, and we have the high of it if there was another wick. So we understand that. We went through that, in previous videos. So when we have a bearish candle within an uptrend, and then a bullish candle that closes above the opening price of a bearish candle, this validates this as an order block, and I like to mark these with an orange box. Oops. Okay. So there's your order block. Boom. Right there. So how do we use this? Is that, like I said, it's a change in the state of delivery. So when it's a change in the state of delivery, we don't have any trading to the upside from this area right here in this shaded box. So just like fair value gaps, just like liquidity, not liquidity voids, but volume imbalances and inefficiencies, this is inefficient in a certain area of trading, and that is downward and upward, because there's no trading in here. So price, just like anything else, all of our other confluences is going to be drawn towards it. Sorry about that. And it'll act as a magnet. So if there was a candle that trades down into this, we can use this as a confluence that this is only coming down in here to provide, some type of fair value, and then continue in the direction that, it was going, which would be the uptrend. So essentially how we would use it is whenever this comes down into this order block, we could, execute or, buy or sell, or buy, excuse me, this is for bullish order block. So we would buy it somewhere, any point inside here. And let me see, do we have an arrow? Yes, we do. And then we would expect price to do this. Can I rotate this anymore? No, we'll just do that. Well, we'd expect price to continue in the same direction that it was going beforehand, because all this was doing is returning down to this order block to provide some type of fair value to the marketplace. Let me see. Now, the confusing part is that it's not always going to be this perfect, and it might not always have just one single candle. There might be multiple streams of candles. So if we do this, let's do this. So let's say we have this pattern. We have, an uptrend coming. We see this candle, and then we see 3 bearish candles down here. But the next candle after these 3 bearish candles closes above the opening price of these continuing bearish candles. This qualifies now as a full order block over here. So we have to drag this box up and over, and now here's our full order block. And same thing, when price retraces back down into the order block, we can use it to take a trade off of it and then continue in the direction that it was going. Making sense so far? I hope. So let's do a bearish example. So I'm going to just type it out again real quick. Bearish order block. When the current trend is bearish, whoa, what happened there? Or down, and there is say bullish or sorry about that, there's a fire truck going by. Up candle, and the next candle, or we'll put S just in case, because we understand there's, it can be more than one candle. Next candle, or no, sorry, I should put it up here. Candle or candles, sorry. And the next candle that's bearish or down closes below the opening of the bullish candle or candles. We have then created a bearish order block. Okay, so got that. So let's go ahead and draw this out real quick. So down, and then we'll say we have an up candle, come on, and then we have another down candle just like that. Make that one blue. Okay, perfect. So like I said, I'm not doing wicks, but anyway, so here we're thinking that, or we're assuming price is gravitating down, 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 down. We see this candle, then we see an up candle, then the next candle closes below the opening price of the up candle. That validates this up candle as an order block. Okay, you seeing that? So if price was to retrace up into here, this area, we understand, just like the other example, like I said, this is like a magnet. It's going to be one to draw back up into it, and if it does, we can use it to take a trade and continue in the direction that it was going. And just like the other example, let's say this is like this. Come on, don't mess with me now. And we have, we're just going to do 2 for this one. We have this, we have these 2 candles. Then we would have to extend the order block from these 2 candles because they are the consecutive candles within this price range. And I'll move that up to there. Right there. Boom. So now these 2 candles form the complete order block. Actually, no, that's not correct. Sorry. So we would have to do it like that. And that. Boom. And let's do, whoa, come on now. Okay, come on. Alright, this thing is not having it right now. What the heck? What is going on with my computer? I have no idea. Come on, why are we frozen? Jeez, I can't even move this thing, barely. Okay, I'll make this bigger. So, boom, and then we'll just say like that-ish, and then we'll say this candle closes like that. And then, like I said, we'll have to adjust the order block to fit both of these candles, and thus we have created our full order block. And just like the other example, if we have a candle that trades up into here, same thing, we can use it to execute and then continue in the direction it was going. So those are the drawing examples that I wanted to show. Let's go into the charts and actually do some examples here so y'all can see it for yourselves.